I'm seeing this more and more. So I've got a client. He bought a home about a year and a half, almost 2 years ago. And at the time, we got him a really good rate. But rates today are much better than they were then. So I talked to him. We're looking to refinance. We want to lower his interest rate and his house payment. I call him. I go over. I say, hey, you know what? It looks like your house payment's going to go down by about $280 a month. That's a significant savings. You're looking about almost $3,500 a year. That's quite a bit. And so anyway, I'm talking to him. And he's like, man, do you think rates are going to get back down to 3%? I'm thinking, you know what? Let me go over what would have to happen for an interest rate on a 30-year fixed mortgage to get back down to 3%, because I don't think a lot of people that say that fully understand the ramifications of what they are asking for. First of all, to get a 3% mortgage rate, your 10-year treasury bill would have to be about 1%. Now, what does it take for the 10-year treasury to get to 1%? You're talking massive reductions in the economy. We're talking massive unemployment, massive recession. In order for rates to drop to 3%, when rates are 3%, especially some people that are self-employed, some of these people that are in different industries, you could be without a job, is kind of what I'm getting at, is that in order to get a 3% interest rate on a mortgage again, there's going to have to be some sort of catastrophic or significant economic recession. So I don't think you really want rates at 3%. I mean, it would be nice if we could live in today's economy, which is still not perfect. We still have high inflation. We still have a lot of things that are affecting this economy. But if you could take today's economy with a 3% interest rate, that would be fantastic. Unfortunately, we aren't dealing with that. That is not reality. In order for rates to be 3%, you're talking about a 1-year treasury or a 1% treasury. You're talking about a huge economic recession. You may not even be buying a house at that point. You may not make enough income to qualify. You may not have a job. So I get it. I wish we could have 3% rates in today's economy. However, it's incredibly unrealistic. And if it was something that happened, the 3% interest rate may not be your biggest concern. So anyway, take that for what it's worth. Rates are good today. If you're saving the money, don't bet on the future. Take what you can today. If there's anything I've learned about the mortgage industry, take what you can today. Create the savings now.